at the end of the day, a model is nothing more than a storytelling tool.
Yeah, fair.
A quantitative storytelling tool that allows you to pin your plans down back to numbers. Right. So the model is important. The bottom up is important. The forecast is important. The investor model is important. And it's important because you want to be able to constantly update your investors so that you can, over time, generate trust.
Yep.
Like they understand, you do what you say.
Yeah.
Right? You say that, I'm going to have this cost base, you have the cost base. If you don't, you can explain why.
Yeah.
And you bring them along the journey and you modify, you update.
All right, welcome back to Let's Talk See Business. Today we are joined by Dominic Ong for our final episode of the podcast. So very special. Thank you for joining us today, Dom.
So maybe just a caveat today. Tristan and I are the first time podcast hosts. You might notice that today Reggie is not with us, our venerable senior who used to guide this podcast.
Maybe to kick things off, today's discussion will all be about building financial resilience. It'd be great if you could, before we dive into the topic, if you could just kick us off with a bit of an introduction of yourself and the work that you're doing at Endowus.
My pleasure. And first of all, thank you for having me here. I have a less traditional kind of CFO background. I'm the CFO of Endowus, which is a digital wealth platform headquartered here in Singapore, also operating in Hong Kong. This is actually my first CFO role. I've been here 3 years. I also run, quite unusually, the corporate business development team as well.
Yeah.
So quite unusual.
It is quite different.
It is quite different. And it requires you to do a lot of context switching during the day and problem solve on a lot of different areas. My background is mainly in consulting and banking before this.
Yeah.
Cool.
Awesome.
Yeah.
And maybe just to kick things off, I'd love to start the conversation by talking about what strategies should businesses have in mind when they're thinking about optimizing their cash and their cash management.
Sure. That's a fantastic topic because in this interest rate environment and this inflationary environment, you do have to try to generate a yield on the cash that you already have. I mean, in many cases, such as in our case, you're a startup, you're not yet profitable, you fundraise. So what you get is a pot of cash. And what you do, you draw that down as you expand, as you hire people and all that kind of stuff. But in the meantime, you should be trying to generate a yield on that. But the trade-off that you always have as founders or as CFOs or treasurers is between yield and flexibility. You often don't want to. I mean, the two are usually somehow inversely correlated. So the more yield you want, well, guess what? It's a 12-month fixed deposit or some instrument of some sort.
Yep.
So it's very hard to get the best of both worlds, but I'm going to just illustrate this with an example. So in 2022, I joined Endowus in 2021. We did a budget, full forecast, and we can talk about budgeting later, that, right? But we had a nice forecast for 2022. Somewhere around February, my founder came to me and said, "Oh, guess what? We're going to buy this small company in Hong Kong, right? Oh, how much are we? What are we going to buy it with?" And the answer was, "Oh, we're going to buy it with cash." So then there goes your planning and forecasting cycle for the year, because there was this cash element that, and so good thing we actually in that case we actually held our surplus cash, which we had just fundraised earlier, late in 2021. We held it in our own instruments. We obviously do digital wealth management, so we actually held it in our own money market funds, which you can liquidate anytime.
Yeah.
So you get the money in 2 days or less. So we just liquidated at the right time because the whole transaction still took multiple months. So you were still generating a yield all the way through. But you didn't panic because you didn't have to liquidate some fixed deposits and incur some kind of massive lose all your interest, for example, which is quite typical.
Yeah.
So I think flexibility and yield, these are two things that you have to consider. Don't just look at the yield, look at really how robust your planning cycles are and whether any contingencies could come up, like the example I just gave you. And in our view, I mean, this is obviously partly because of the hat that we wear and the lens that we look at things with. We would advocate using money market funds, perhaps on a platform like Endowus would be one way to achieve both.
Yeah, maybe for like the broader audience, right? You could explain what money market is, because I don't know what money market.
No problem. I mean, money market funds, and you'll find that actually a lot of CFOs don't either, and certainly founders may not know. You're familiar with what funds are, right? So it's a collective investment scheme holding a bunch of different instruments.
Yeah.
Money market funds in particular are where the fund manager holds very, very safe instruments, and typically these are fixed deposits. So they could literally hold a fixed deposit in the pool on your behalf, or typically treasuries. So in Singapore's case, it's MES bonds, MES notes, right? As well as T-bills. In the US or USD, it'll be treasuries.
Yep.
Fixed deposits as well. So near cash instruments. So it's almost like you running it yourself, except that the fund manager is doing it, and you get a pool of assets. Yeah, and because of that, I think one of the implications is that there's no mark to market. So mark to market is when you have to say, hey, the market now values these instruments at a certain amount, whether up or down, and then you mark that accordingly. But for money market funds, because there's a fixed maturity and it's very safe, and there are a whole bunch of rules around it, you go, well, if it's a 4% instrument, then every day I mark it up by 4% on specific line. Broadly speaking, I mean, not exactly, but that's and so it becomes a very straight line, which for a treasurer or finance person is incredibly important, because you don't want the value of your investment to fluctuate. You want it to be very predictable. Exactly.
And so is this strategy also something that companies can use for, let's say, for businesses that are operating across multiple countries, and when you're considering currency and maybe geopolitical risk and things like that? Is it also a strategy for helping manage in terms of diversifying the currency holdings?
So I think, that's a very, we can try to unpack that a little bit. Both topics there.
Yeah,
right?
yeah.
So I guess one topic is what do you do with different currencies? Yeah. And for us, we only operate in two markets, so it's not that complicated. Singapore, Hong Kong. Hong Kong is essentially kind of USD pegged.
Yep.
Singapore kind of has a semi-peg versus a basket, of which the USD is dominant.
Yep.
So I'm not too worried about currency risk. In fact, most companies fundraise in USD if you're fundraising from institutions, but most of our expenses are in Sing dollar. Not to worry about that mismatch, so to speak. I'm not bothering with hedging or currency forwards, all that kind of stuff. But what we try to do is to generate a yield in both currencies. You obviously need some Sing dollars, and the majority of the pot remains in US dollars until you draw down. But we make sure that both pots are, we make sure two things. One, that both pots are generating a return. And secondly, that you don't lose value when you do currency exchanges, which you can very easily do when you go through a bank. Yeah. Because the banks will charge a huge spread. So making sure that you use all these new fintechs, like ourselves, but others as well, where the FX becomes very tight in terms of the spreads. Because particularly if you're doing something in the millions, it does add up. Yeah, but we don't really do hedging from that standpoint. We're not that complex. I think if you are, then you need to probably work with the banks to come up with something more comprehensive. Yeah, especially if you're the currencies that move quite a lot.
And I think it's helpful because I think a lot of our listeners think about geographic expansion and know what you mean in terms of it depends on the market. So if it's Singapore and Hong Kong, it's probably less applicable, but depending on the market that you're looking to expand into, maybe it becomes a bit more important to think of those strategies.
Yeah, I think so. It's actually something I want to double click on, right? Because I think the two markets that you mentioned are like one of the more stable markets in the region, whereas I think a lot of the audience we want to reach are looking to build into Southeast Asia. Sure. And Southeast Asia is like wobbly, right?
We operate in Malaysia as well. So that's one example.
So that's great, right? So would the same advice apply to these kind of markets? An opportunity for you to talk a little bit more about these money market funds. How can they leverage those more in this particular region, in the context of Southeast Asia?
How do you leverage the money market funds? I think you just have to make sure that you get access to instruments in different currencies, even if it's all in... typically you open an account in your home office with your holding company, right? Yep. So if you're headquartered in Singapore, quite commonly you open an account. You just try to make sure that that's able to cover the range of your needs. Right. So for us, we do all major currencies, not ringgit, for example, but we do USD, euros, Aussie dollar, of course, Sing dollar. Right. So these are currencies that we have instruments you can invest in to generate a yield. We also offer the FX across all the 6 major currencies. But to your other question about when do you worry about currency? Yeah, I think to me, I'm not worried about it yet because our Malaysian operations are quite small, and so far recent history shows that it's depreciating. And it's not our revenue base, it's actually
Yeah.
our cost base, right?
Right.
But because it's small, I think that's the most important
Yeah.
factor, the
Right.
materiality of that market or
Right.
that currency. Because it's small, we don't really worry about it too much.
Got it.
Yeah, so I think when it becomes material, I mean, whatever the threshold is, 20% or whatever of your revenues or something, then I think that's when you need to have a more considered strategy.
Yeah.
Yeah.
So if I understand correctly, you're saying like you hold these different like buckets of cash, different currencies in your home account, like in Singapore.
Yes.
So if you do set up like entities in the region, right?
Yes.
Do you have any advice around, or should you be moving more money into some of these entities versus retaining them in home base?
Okay. So I think for ease of administration, you always want to have as few accounts and kind of like as much concentrated as you can, subject to constraints. What are those constraints? For us, the first constraint is we're regulated business.
Yeah.
First constraint is regulatory capital.
Right.
So the regulator in Hong Kong, regulator in Singapore, and we have 2 entities in Singapore, by the way.
Oh.
So we have a holding company, which is where investors come in,
Right.
and where we own our own ESOP and all that. That's in the holding company.
Yep.
But there's also an operating entity which is licensed, and we have one in Hong Kong as well. Right. So even within Singapore, it's which entity holds the cash.
Yep.
So the starting point generally is keep it simple, or the holding entity, and then you inject capital as you need. Right. And what are the needs? The needs are regulatory capital. So a constraint, there's a minimum, there's certain calculations you have to make.
Yeah.
In Hong Kong in particular, they're quite picky about if you're loss making, how many months of runway does the entity have?
Okay.
Yeah, I want to ask you a lot of questions. The SFC will literally send you emails,
Okay.
right? Which the first few times you get it could be quite intimidating because this is your regulator.
Okay. That's
Right. So that's one. And to avoid those questions, you go, okay, clearly they want 12 months of runway, so I'll make sure that I have 12 months of runway. So that's one constraint.
Okay.
The other constraint, of course, is you need to pay employees, suppliers, and so on.
So OPEX,
Yeah.
expected OPEX.
Your expected OPEX. And that one, sometimes things vary and change.
Yeah.
So you want to be somewhat flexible, as I mentioned earlier. Also because you don't, when you're a smaller company, and we're still relatively small with about 150 people,
Yep.
you don't have access to super sophisticated planning tools or
Yeah.
treasury management tools.
Yeah.
So if essentially you're relying on spreadsheets, right? Right? And your spreadsheets do end of the month.
Do they ever go away?
No, I think if you have if some of your audience is, from larger companies, they'll be like laughing at this because no way they can manage their bank accounts on spreadsheets. Even for us, we probably have like 20 bank accounts.
Yeah.
We do it once a
Goodness.
month. So somebody literally logs into every account and writes the balance. And importantly,
goodness.
write the balance in the correct home currency. So I've had a case where my finance staff took a USD amount and wrote it as Sing dollar.
Oh, no.
And it looked like I had an extra burn of a couple of 100,000 for that month.
Yeah.
Wow.
Yeah. So manual errors. So I mean, I'm sidetracking a little.
Yeah.
But the point being that you don't need decimal place accuracy. You just need to have enough, and then you put a buffer, right? So that's what you do. And typically, or oftentimes in your subsidiaries that's in the overseas market, you may not have as many bank accounts and so on. So your investment options are limited to your home office, and so that's where you generate the yield,
Got
and
it.
then you transfer as and when needed,
Okay. So it's more
as little as possible.
concept. You try to hold as much as in home base, and then you transfer out as required. Also, you take care of the compliance, right? And then after as required, as forecasted, then you start moving money across to those entities.
Have a buffer, and then as the buffer gets drawn down, you top it up.
Okay.
So very practical way of doing it. I don't have a full-time treasurer. So this is literally my head of finance, one of her many hats that she wears. And so we're fine with just do what you need to, have more of a buffer if you need to.
Yeah.
Go fine with it. If you sacrifice some yield, so be it. That's the cost of being small in some cases, right?
Yeah. And maybe on this theme of spreadsheets, I'd love to pivot and chat about budgeting, which is something that's, of course, going to be on the mind for a lot of founders, chief of staffs that are thinking about how to do this right. And earlier you were talking about the importance of adaptability and flexibility just in planning, which I know is something that you have to keep in mind for budgeting as well. So how would you advise, startups, SMEs to really think about building a budget that has, enough clarity, but still embedding enough adaptability in there? Interesting.
That's a great topic. So I think typically if you've already fundraised, the board would, like Series A, a proper investment round, your investor would expect that you have some kind of annual budget, which is ratified by the board. Quite common. It's good practice in any case. So once a year, you embark on this, major exercise to say, hey, here's my forecast revenues, forecast costs by key buckets, and so on. Headcount, you do this and do that, your G&A, other buckets, depending on what you're doing. So for us, marketing is a big expense item. Of course, we are fintech, so system and IT is a big cost item. We forecast each of those big items out.
Yeah.
Right? So once a year you do that.
Yeah.
You then bring it to the board. Sometimes the board will push back, especially if they're external.
Yeah.
Sometimes they don't. Depends on whether it's 2021 or 2023. It's a very different environment.
Yeah.
I hope my investors are listening, but it is true. But anyway, that's a once a year process, and it's locked in a sense. That doesn't mean that your planning cycle, doesn't proceed or continue till the next year. So I think what's happening now is that for smaller companies, for startups that need to be more dynamic, it is actually important to have kind of very, very live and real time decision making. So what does that mean? So a couple of things that we try to do. So first, we delegate authority to spend to the people that are closest to the action and can make the right decision. So what does that mean? So for example, marketing spend, which is obviously a significant cost item, goes to the head of marketing, our chief marketing officer. Our cloud spend also quite significant just because of the nature of our business, goes to our CTO, chief technology officer, and they have certain guardrails. Obviously, the budget is the broadest guardrail of all to say, hey, don't exceed this number. Along the way, you run many experiments, right? Whether it's cloud or marketing or some variation, there are always things you want to try. So the important thing is to iterate, run pilots, run small things, and watch the data. So always have a way to say, hey, what's the impact? For example, you run a marketing campaign, right? Always look at what's my cost of acquisition, what's the impact of this? Do I do this again? What does it tell me? And actually, similarly for other cost buckets as well, technology and so on. And there's no way for someone, CFO or someone in the finance function to be able to come up with all of these things. You have to delegate to the people that know this best, right? But while keeping an eye on the bigger picture. So the annual budgeting cycle is not going to go away, right? But I think it needs to be supplemented with kind of very dynamic and flexible planning along the way with perhaps some new forecast cycles where you go, hey, based on what we currently know, we're going to spend more or spend less in certain areas. And then you aggregate everything and say, hey, does this look okay for the firm as a whole? We're actually going through a forecast process right now for the rest of this year. So halfway through the year. It's hard to believe, but we're just about the end of H1.
But I think, thanks for sharing that, right? I think this is something that I think a lot of our audience can resonate with. Like reforecasting, things like having a broad guardrails to privilege speed for experimentation.
Sure.
So thanks for that, touching on that. If we go a little bit more into like some nitty gritty, what are some tools or softwares that you can recommend, to streamline, just budget creation and management beyond, your super Excel masters?
Damn, I was going to say Excel. I recommend Excel. Okay, fine. Not Excel, then G Sheets. We recommend G Sheets. No, I'm kidding. I mean, I think in most cases, and we're not in the position where we can spend a lot of money on this type of fancy tools. But I'm looking forward to the point where I can look at companies or software such as Anaplan or GDoc or others. There are actually many software, many planning things out there. Tools out there. Yeah, exactly right. But I think in the majority of cases, if they're similar in stage to us or even beyond, you still be very reliant on Excel spreadsheets.
Fair enough.
Yeah, and that's because I think a lot of the range of business models and everyone's model is different. You've got different entities. You have all sorts of different business lines. It's probably a lot of work even to try to capture that in a planning tool. So we haven't looked at it, but my suspicion is that we probably need to get a bit bigger before the work that you put into configuring the tool starts giving you dividends in terms of time saved. But then you have to train everyone else in the organization as well, right? So you can't run the tool all by yourself. You have to say, marketing, what's your input?
That's true.
Other teams, tech, what's your input? And then you have to teach them how to use the tool. And
it's a massive change management exercise.
It's huge, man. It's really not a small thing. So
maybe
spreadsheets is the answer.
I mean, I think a lot of us can understand where this is because like the switching cost and learning curve can be insane when it comes to implementing a new technology. Right, but perhaps are you on the cusp of like identifying what would be the inflection point? At what stage does it seem to make sense to want to invest in a tool like what you mentioned, Anaplan? I think we've experienced something similar in our organization as well.
How big is Glintz in terms of employees?
We have 900 people,
900. How many in Singapore?
about 100.
Okay.
Then the rest are in Vietnam, Indonesia, Philippines, Taiwan.
Right.
You know,
You're quite a bit larger than us, obviously. I think for us, the inflection point is to start evaluating the tool around now. So once we finish the audit, we're still going to audit, and we're hiring one additional person in Malaysia.
what will be the indicators that lead up to this decision? Because it's a very big investment.
I think the indicator is when your budgeting and planning cycle takes you days rather than, or takes you weeks rather than days. I think that's one indication. Yeah, and
Okay.
we are kind of at that point. But we should be starting to evaluate whether or not any of these tools make sense. And if they do, I think we're at the point where we can spend not a huge amount, but still, make an investment in those tools.
Yeah.
Both the time and the cost investment.
Let's Talk See Business is brought to you by Glint's Talent Hub. We understand that building a thriving business is immensely challenging. It is especially intense for business leaders like yourself. Hence, we want to journey with you. Glint's Talent Hub is the leading all-in-one solution for all your talent needs. Our mission is to pair you with the right talent anywhere across Southeast Asia that fits the unique needs of your business. From there, we handle all your talent management needs. We're talking talent sourcing, hiring, EOR, PEO, talent development. We have a track record of 2x faster team building and up to 70% cost savings. If you want to expand in Southeast Asia, we are your partners. Connect with us, link in the description below. And so there's the budgeting component in terms of managing the day-to-day operations, and then I think there's also a forecasting, and when we think about the role and purpose of financial modeling and being able to tell convincing or being able to basically share the plan with investors if you're going through a fundraise. And I'm really curious to get this perspective because you wear both hats in addition to other hats. But
Wearing hats is my specialty.
Yeah. Curious to get your perspective really in terms of the role of financial modeling in terms of forecasting and therefore being able to tell the story of your company to investors and
Okay. So there's this tension between doing an investor-friendly model and a bottom-up budgeting model, right? I think the investor model needs to capture all the key drivers that you speak about the business in. So things like, in our case, assets, take rate, or things like employees, employees. These are key drivers, right? You need to translate the whole business model into something that is driven by these key drivers or key metrics. Still being simple enough that an investor who may not be an expert in your industry will be able to follow. So I'm talking about things like something like 20 lines.
Yep. Oh wow, it's quite small.
Not huge.
Yeah, that's great.
Got time horizon.
Yeah.
But then 20 line items.
Nice.
Okay, maybe 25. Right? But the point is you're going to have another model which you use for budgeting, which is really account by account.
Yeah.
So in that model, the investor model, you're going to have G&A, and you're going to say, well, G&A roughly is, I'm just making this up, right? $100 a year per employee. And as my employees grow, the 100 will become 95.
Okay.
Because history tells me a little bit about the trend.
Yeah.
I extrapolate the trend. I interject with my, or I put in my assumption on employees, and so G&A is 2 line items, right?
Yeah.
On my bottom-up budgeting bill, guess what? There's T&D, my pantry supplies, everything comes in.
Yeah.
All the way through to as basic as my pantry supplies and internet, all the way up to my legal fees and audit fees, right? And insurance.
Yeah.
So it's a bottom-up kind of exercise. But then you have to say that the bottom exercise tells me that the total will likely be this amount. That's your budget, and you get the board to approve it. Then you translate it into the investor model.
Yeah.
So the long and short of this, and by the way, that's only for the budget year. Then the investor model will go up a number of years.
Yeah.
Which is not bottom up anymore, right? So you have that landing point, and then you extrapolate and tell your story. Because frankly, at the end of the day, a model is nothing more than a storytelling tool.
Yeah, fair.
A quantitative storytelling tool that allows you to pin your plans down back to numbers. Right. So the model is important. The bottom up is important. The forecast is important. The investor model is important. And it's important because you want to be able to constantly update your investors so that you can, over time, generate trust.
Yep.
They understand, you do what you say.
Yeah.
Right? You say that, I'm going to have this cost base, you have the cost base. If you don't, you can explain why.
Yeah.
And you bring them along the journey and you modify, you update.
Yeah.
And that's very important, particularly if you're loss making and you need another round.
Yeah.
Right. And or if you need to invest in, like the example I gave you where we did an M&A. So we need to go back to the board to say, hey, this is our plan. So the more trust you have and the more you can put things down, put pen to paper, I think that's the better it is.
Yeah.
But don't forget employees too.
Yeah.
Because I think that kind of plan, and I think you have to be careful a little bit about what you show employees. It's not exactly the same plan you show to investors.
Right.
Yeah.
But if you can also articulate the broad financial strategy,
Yeah.
I think that's also incredibly important. And
Yeah.
tie that back to why you're doing the things you're doing, what your key initiatives, you're placing bets on certain things, right?
Yep.
Like, in our case, we are resource constrained. We do A, we can't do B. Why do we do A and not B? So these things come into the model, and it helps that you're able to articulate it that way.
And we spoke earlier about the difference between 2021 and 2023, which is a very different investment landscape. I'm wondering, with
Slightly.
I
I noticed a little bit of difference, yes.
with the change in the market, is there a different set of expectations that investors have? As an example, do they want more details and a more granular model, or what are some of the changes you've observed in terms of what investors would then be?
I think it's the first and the most important one is that there's this focus on profitable growth or profitability.
Yeah.
Whereas in the past, it was just growth, right? Growth at all costs.
Yeah.
Now it's growth.
And less cost.
But growth to what means, right? And there's a means to getting profitability. So I think that's the first change. Like if you haven't broken even, then what's your path to profitability? That becomes much more important rather than, I'm growing, so keep going.
Yeah.
Right. So I think that's the most significant change that I can share. And everyone kind of pivoted to that quite quickly in 2022. Because you have to assume that you may not be able to fundraise for some time.
Yes.
So,
I mean, I've been looking at Crunchbase for a while, and like I think it picked up like end of 2023, and then it was okay until like mid of like Q1 and the Q1, and now it's like
it's gone back.
It's just going down again.
Yeah.
I think Singapore base is like 2 a month this month.
2 fundraise.
I think so.
It's true. And I think until interest rates get cut or move down significantly, it's just harder to justify the cost of capital.
Yeah. Yeah. Got it.
So I think only the most attractive businesses will get funded.
Yeah. I think I do want to jump into like something that you mentioned earlier about team building as well. And you wear your both hats for this, right? So on one hand, like, when you look at going into a new market, from the finance perspective, right? Like, what kind of qualities are you looking for in terms of who you hire, kind of lead up, the first hire in that market for the finance perspective? So maybe we can tackle that one first.
Okay.
And then on the BD perspective, right, again, similarly, what are your thoughts around what are you looking out for, and what kind of headcount are you looking at?
Okay. It's a lot of topics.
Yeah, we start with the finance one first.
Finance one. Okay. We've actually not hired anyone outside of Singapore.
Oh, really?
Finance. Yeah.
Wow.
Our
Okay.
first hire fingers crossed, will happen in Malaysia.
Okay.
In August. In August.
Okay.
Yeah.
Have you started the search really? Or?
Yes, we've identified a candidate, and that's in this case, Singapore and Malaysia are very, very close, both geographically and culturally.
Yeah.
And so we intend to bring this candidate over to Singapore for a week to induct her, and then we'll be quite close, watching her quite closely for a while and all that, right? So, I think that's really a function of that's just really a function of getting very high quality headcount.
Got it.
In Malaysia.
So maybe although you haven't had like a prior experience per se, or you already have selected somebody, what did you look out for in this person, and what's his role?
So the role that we have is a finance manager or finance executive role. So this lady will do the accounts, right? Help us with the accounts, help us maintain an entity in Malaysia, do the regulatory filings, as well as basic stuff such as managing employees' expense reports, approving them, and that kind of stuff, payments to vendors.
Yep.
So this kind of stuff.
Okay. And again, like I think similar question before, like what's the inflection point? Like when you decide to put a more senior like finance headcount in a new market?
Yeah, I think that's a challenging one. And if you take a step back, it's a question about how much you want things to be centralized and kind of consistent versus how much you need things to be kind of on the ground and localized. I would say broadly speaking, I think the business side of things needs to be a lot more local. So, for example, in Singapore and Hong Kong, we have teams that cover all the key client-facing functions.
Yep.
Ranging from investment office, client advisory, business development, and so on, as you would expect. Because Hong Kong is a very different market, and you have to be on the ground, you have to meet people and all that. Support functions like finance, at least the more basic finance-related functions, don't have to be on the ground as much. So you can try to get economies of scale, all that kind of stuff by centralizing it. So I think it really depends, first of all, on how complicated things are and whether or not you're client-facing. Yeah, so I think generally for us at least, we try to centralize as much as we can. Singapore, otherwise you're just duplicating your cost base in the second market. Yeah, so that's to your earlier question, and this is not my team directly, but I can share with you what my observations from how we've hired in Hong Kong.
Yep.
So I think it's very important to hire somebody who represents your business and your brand well.
Yep.
Right. So in our case, we hire a lady called Stephanie. I sometimes speak about her when people talk about international expansion.
Yeah. This is the BD role, is it? Or
It's the head of Hong Kong.
Oh, okay.
But she runs Hong Kong BD
Okay.
as well. So as head of
She takes care of the whole P&L, is it? The full P&L or primarily the revenue side of things?
I think it's hard to say in the sense that she does own the P&L, but one of the founders sits there too. So I guess they jointly hold it.
Okay.
Right. In a founder-led organization.
Yeah.
You tend to have the founder still kind of responsible.
Yeah.
But she is, in her role, she is meant to be responsible for the revenue and to some extent the cost things.
Got it.
So, but it took us a long time to hire her. And I think it's because we took time to make sure we got the right candidate. We interviewed for something like a year. Some of them are very impressive, like paper and all that.
Yeah.
We had to take time to get someone with the right fit, really it's a fit, and fit is a function of different things.
Yep.
So in this case, it's really the fit with our mission.
Yep.
You'll find that people at Endowus are actually very missional, like they really believe in the mission of what we're trying to do in terms of reforming the investment industry, if you will, and in particular the distribution of funds.
Yeah.
So the practices that we have are unique and quite innovative and aligned with the end investor. And we wanted to find someone who can encapsulate that ethos in a new market. So this person becomes like a brand evangelist, if you think about it. Obviously, someone with deep experience, local contacts, and so on, but also you're hiring your first brand evangelist, and that's important to get it right.
Yeah.
Get the wrong person, it's actually very difficult to unwind and recover from.
Yep.
So I'll give you one very interesting anecdote about Steph. She's almost always dressed in a blue Endowus t-shirt.
Okay.
With a jacket.
Okay.
And I've even had people say to me, like random people, my friends, but random to Steph, say to me, "Oh, I saw Steph on the street. She's in
iconic
in her blue Endowus t-shirt again." Other people will ask, "Does she own other clothes?" I mean, she changes.
Yeah, of course. Of course, you know that.
It's
I assume there are multiple. Yeah.
But she's got many.
That's awesome, right?
Blue and white Endowus t-shirt.
She's really carrying the flag.
Yeah.
So you're carrying the flag, looking for your flag bearer, and that's could be harder than you think.
Yeah, no, I understand.
Could be harder than you think, but at the same time, you get the right person, and that flag is flown high, right?
Yeah, so important to get that right hire, especially when they're senior, especially when it's in a new market. So when it's the intersection of those two things, finding that right person takes time, as you said.
And the right person hires the team.
Other right
Yeah.
people, yeah. So.
Yeah.
Yeah, it's
Right up Tristan's alley.
Yeah, I spend a lot of my time looking at our own executive team and the hires that we're making and how we build. And similar to the approach that you described, I think when it takes time, it takes time. But what really matters is just getting that decision right, because they're going to be a big part of building out the rest of the team from there.
Your approach was to hire the senior person first, as opposed to the junior.
We actually hired kind of a mid-level person first. Because it took us that long to find Stephanie.
Yeah.
And we needed things to get moving. It was regulatory business, right?
Yeah.
So applications, that.
Yeah.
So we did hire somebody a little bit more junior, mid-level, I'd say, and then before we finally found our head of Hong Kong.
Okay, but like the junior BD team and all that, that's not yet in yet. So she'll be the one building out that team.
No, so Steph has been with us for about 2 years.
Oh, wow, okay.
Yeah, so not new.
Yes,
but we had been looking from 3 years ago, 2021.
You had mentioned that you started the search 3 years ago. She's been with the team.
Yeah,
right.
Around 2 years.
Yeah.
Okay.
Yeah, so the BD team, the client advisory team, the investment team, the nucleus is now formed, and one of our founders has also moved to.
Okay.
You spearhead very important market.
All right. So just to summarize that part, it's like you hired your leader first, and then from there you hired a more junior team.
Yes.
Okay, got it.
I think you can say
Yeah.
that.
Because we've heard, I think, different approaches to this. I think one of our episodes with Thomas String from Aspire, and his was to hire
Thomas?
Yeah. More senior ICs, 2 of them at any new market to kind of test the demand first.
Okay.
And then I think he builds up
Got it.
the sales op from there.
Yeah, but for us, I think it's not possible to test demand because it's a huge investment, right?
Yeah.
And for us, we have to get licenses,
Yeah.
build a platform.
Yeah.
So it's a different ballgame. When we commit to a market, it's a big bet.
Yep.
Yeah, so I think for the listeners on the line, it sounds like one of the key takeaways is to really think about the business that they're operating in and consider both of those as options, whether you're, hiring more mid-level talent to test the market versus if you're in a situation where the cost of testing is a lot higher than this approach that you're describing in terms of really doing the diligence, taking the time, making the right kind of investment up front. Probably saves a lot of money and headache, I should say, in the longer run.
That's right.
Yeah.
So for us, market entry is a huge bet. Company. And one that we have to get right.
Okay, I think we're coming to kind of the end of the session today. Maybe one last thing we're gonna cover would be we talked about looking at financial grants and incentives.
Oh, okay.
Yeah. In
Free money.
as much as possible. Any tips or things you can share in it?
Sure. I think, again, from our experience entering into a new market, in this case, Hong Kong, I would say don't forget to look at both your home market, so there are grants for you to expand overseas, whether it's Enterprise Singapore, in our case, MES. There are lots of grants that are available. Actually, I've even come across grant specialists who can help you. We've not used them. We've not used them, but I occasionally get their ads.
Yeah.
But don't just limit yourselves to that, because in the market that you're entering, there are often grants as well.
Yeah,
so we've tapped on 2 different grants in Hong Kong. So of course, very sector specific. But look out for your sector, your industry association, and usually there'll be people who can help you. There'll be people who can help you. So there are government agencies dedicated to this who can point you to where the grants are. So don't miss out on this. This basically pot of gold.
Cool. I think that's it from my end.
Yeah, maybe just as we come to the close, any parting advice for founders, chief of staffs, other listeners on the line that are thinking about how to really set their organization up well in a way that gives them the financial resilience. So any parting or concluding thoughts that we haven't touched on today?
Yes. So hire the right people and don't run out of money.
Very good advice.
Yes, especially in this environment, that don't run out of money piece is important.
Thank you so much, Dominic, for joining us today.
My pleasure. This is fun.